Anupam, all for you now, question answers point of view.
Uh, Thanks, Sandeep, for the detailed presentation, and I think you have covered most of the aspects uh, which is prevailing in the market. But one of the question is currently the Iran-Iraq war, crude price, and U.S. markets. There is a lot of uncertainty. So, what do you feel that what kind of an impact we can have on the Indian market in case war prolongs or U.S. market or maybe rupee weakening over a period of time?
So one very specific thing, as I said in the beginning, we are in elevated geopolitical environment and will remain there for long. But we also work on market implied analytic as a thesis. If we have talked about how crude cycle has actually peaked out, which means worst is behind us. So I'm again going to repeat that for India, worst is behind us. And now one should not try to do too much analysis on crude. Market has showcased that it is refusing to go up. Despite we have seen some sort of clashes in last 1 or 1.5 month also in the Middle East region, but crude is unable to follow. That's a clear indication. At least smart money believes that crude is heading lower, and it also corrected. I'm not saying it to correct significantly from these levels, but I think if it sustains around these levels, a great news for India and great news for the currency also.
Sandeep, a connected question is from a Kajal Kiran that is it a good time for a first time investor to start investing in a gold and silver to begin with in the markets?
So I will say instead of participating in gold and silver directly, you come through multi-asset. It is look at the performance, risk adjusted performance of one of the best in the category, best in the industry across all the benchmark it has beaten. So instead of looking at the silver and gold ETF, I think the great strategy to put in quant multi-asset fund.
Sandeep, another question is from Ashish Jain that why don't we take exposure into the global markets if we have a good data to look into?
So we have data, we have edge also, but if you're aware of RBI restrictions are there, we are not able to participate in this thing. So we're not able to do anything as of now. Maybe it's up to time we launch some gift city. So other vehicle we can do it, and the mutual fund is not possible right now because as an industry we have hit the limit.
Sandeep, Shelly Ahuja has a question that should we invest if we have to invest for 5 years? Should we invest in a lump sum or through a SIP route? Uh, Maybe.
See, if you really ask me, only last 2 months something has changed in India. So even at this point, you can invest in lump sum also. The only aspect we said that look at if your risk averse, the multi-asset is better. If you have more inclination and relatively higher risk appetite, and then the flexi cap is for this. The lump sum is also very good from the current level because we are seeing some early signs of recovery. So I think it makes sense to participate.
And to add on, Sandeep, Shelly, if you look at the way we manage the money, definitely if you have a lump sum, it will be taken care of. But one should also invest through an SIP route in the scheme, especially in the whatever scheme you want to invest in the quant specific schemes. Sandeep, another question is from the Manan and Rajiv, and they want to understand that within all the categories we have doing well, but one sector which is like a mid cap. Do you have any views on that?
So in couple of previous month call also, we acknowledged that our mid-cap selection was not good in 2000 end 2024 and 25, and that's the reason any scheme which was mid-cap centric, mid-cap in particular, large and mid and multi-cap suffered. And in last 12 months or 15 months, we have said on multiple occasions, we have said we have revamped the portfolio. And if we have revamped the portfolio, that's the reason it has recovered significantly. But yes, it is on the lower side, and which is visible in the graph also. But we think versus behind for that fund also. We have made radical changes, and you have seen in last 1 month, 3 months, and 6 month performance. That's the way it happened. First, we'll reflect in 1 month, then 3 months, then 6 months, and then go to 1 year. So it is on the improvement side. That's the way I look at it.
Quickly, Sandeep, Akshay wants to know that one of the slides says high frequency macro data is improving. Which aspect is improving?
Now, it is, see, we track thousands of data points. It's not be fair to explain in a minute's time or so. So when I say multiple things is improving, obviously multiple economic data is improving. We're not talking market data or capital market data in any manner. The macro picture on absolute basis, it's improving. On the relative basis, still looks slightly bad because when you compare with other global market, which is doing extremely well, their macro picture is far superior. But in absolute terms, it has improved significantly. Even this crisis, the current government has managed very well. Actually, government absorbed the cost. Otherwise, it could have been very challenging if they could have passed the entire fuel cost to the domestic or the market participant or the citizen in general. It would have been more painful. I think the government has also paid a price. That's the reason we think worst is behind us.
Thanks, Sandeep. And maybe I think connecting question from Yuvraj is about the multi-asset, multi-cap fund, actually active fund, multi-cap fund. So I think there is some challenges and people are facing in that fund also. So
no, we explain same thing. Na?
Yes.
Any fund which has exposure on the mid, so yes, it performed reasonably bad, but it's come up significantly 1 month, 3 months, 6 months, because I explained same thesis. I said three funds, mid cap, large and mid, and multi cap, because this is where we have to maintain certain mid cap exposure. And since the mid cap selection was not turned out to be great, and so obviously all three fund underperformed significantly, and which is the case, we have made those changes, which is now if you really look at it, it is not the case. It has improved. Even both mid and multi cap have improved significantly.
Thanks, Sandeep. And in one of your slides, you said small cap will outperform gold. So, what is your outlook for a small cap going forward? Should we increase?
So beginning April, we showcased this slide, and beginning April till now, in last 3 months, small cap has outperformed gold by 20%. Okay, so that has already played out very well. And if you really ask me from next 3 years perspective, next 5 years perspective, small cap indices will outperform gold as a benchmark. So, which is the important conclusion, which means a lot of people who have chased gold will underperform versus the small cap as a category, which was the reverse in the past. That's the important conclusion we wrote in our April slide, that in gold terms, particularly, small cap will outperform significantly. It has done 20%, very large number. Anupam, are you there?
Sorry, Sandeep. So you are saying that in case any investor has a very high risk appetite, they should either hold or increase their position in the small caps.
100%. Still time. This is the next 6 months, next 2 years, next 3 years. It's all about SMID opportunity. When we said we were the first to actually turn negative in July 24, and we were relatively early. We paid the price of underperformance also for many quarters, because when we were slightly early, but finally that call has played out very well, and now we are saying something has changed. So we are reversing that stat.
Thanks, Sandeep. And I think one question is from Gokul Kerm, that in how many schemes you have IDCW option, means dividend payout option. So Gokul, we have dividend payout options in all our schemes, but as a policy, we usually don't declare dividends in the equity schemes. Sandeep, is there any change in the policy going forward, or we continue to?
As of now, no. Let's both take the call. As of now, in the larger interest, we took this call. It makes more sense. It's much efficient,
I agree with that. Yes. Yeah. I think Rupinder has a question. Which sector look bullish in the current scenario, if you want to summarize one or two sectors?
I think when we talked about, obviously, if you read our fact sheets, the last few months we are talking about power sector. We have actually played a data center theme quite well, because there's no AI play. You can only play through data center, and data center is all about power, telecom, or fiber optic, or some of the telecom companies, product companies, some implementer, So those are the theses which still look good. And power as a theme, both from a renewable as well as thermal, looks very good for next 4-5 years perspective also. So that's the one area. We think large infrastructure is another area which has been neglected and beaten down, could be opportunity to look at. Select consumption also, maybe this quarter may not be great for the industry because of the what happened in the Middle East. But I think market has factored that. So I think next quarter onwards you will see positive impact also on there. So I'm more optimistic and more constructive on the market, but not extraordinary euphoric also. Okay, this is a great time to all go out, and play aggressively. It's not that risk on. Okay, so I will play safe through sector rotation, through stock rotation. That's what I said in the beginning. Don't look at the index. You have to just focus on the stocks, and maybe the flexi caps gives you huge flexibility. If you are a average appetite, then small cap is also a great product even from the current level.
To request Sandeep, and maybe last two questions, and one is that we should do an SIF call also. Maybe in the next call we will be including our SIF review also. And secondly, Sandeep, can you summarize our value fund, because a lot of investors want to know how is it positioning right now, and should they continue in that, or should they move into multi-asset and other funds? I know it's a best performing fund, but because we have not covered it in this presentation, so that's the question.
No, in fact, it has given the highest relative returns, Okay, if a benchmark is flat and we are 18.5. Okay. So I think what differentiate a value fund from our other category in the industry, whether you talk about contra fund or other value fund houses, if you talk about, for many market participants, I was saying, they confine themselves in a very rigid manner. If price to book falls below this, if P is below this, or any other valuation tools are below this, then it becomes a value. I think that's the trap. Okay. The way, if you go and read our PowerPoint presentation value fund when we launch, okay, we explain them is this is not the way we call value. Okay. Value is something which is largely neglected, hated, and there is a deep value. Okay. So we have quantified here. A lot of behavior aspect plays a very important role in identifying some of these stocks, and you have to be very early to do that. I'm just giving you a small example. Let's say take whole world turned bullish. Just for the namesake, I'm giving in last many months about because of oil on the upstream company. Okay, and when crude fell, they just collapsed sharply, without much volumes also. So which means people never got any exit also. The people who participated in the crude rally could not book the profit. It was fall so. Now, like this sort of upstream product companies, I'm just giving you an example, are trading in the neglected. From extreme, suddenly admired, people have just given because crude has collapsed. And where capacities are getting added in some of these companies, governments are taking some initiative. So we find value there. That's the way we defined a value. Is a very different the way. So we are not looking at because this price to book has come down, or price to earnings have come down, or any EV to EBITDA, or any other valuation multiple you look at has come down. No, that's not the one. Okay, you can't just quantify it, which industry does. So it's a very differentiated way we look at value, and that's the reason we have explained. If you have an opportunity, sometime you can refer to that presentation on our website. We give fairly good perspective how we manage that.
Thanks, Sandeep. I think we can conclude this call, and maybe
thanks a lot for your time. Okay, and I hope you have liked the presentation of VLRT. Happy to share that with you on this presentation. Maybe you can release this video also. Thanks a lot for joining, and see you next month.
Thank you very much for the participation. Thank you very much.